Hi, and thanks for joining us today at Tax Talk UK. Here we talk about all things tax and all things that are relevant to those who run their own small businesses. Please do take a second to subscribe to our channel so that you can refer back to our content and be notified of new content as it's uploaded. So let's think about trading style. What do we mean by trading style? Well, basically, you want to run your own business, you want to work for yourself. Lots of different terms all mean the same thing. And the trading style is how are you actually going to do that? And how are you going to notify your profits to HMRC and potentially other authorities, depending on which style you choose. So as a small business, one of the ways that you may choose to trade is as a sole trader. That's simply put, that just means you register with HMRC, let them know that you're working for yourself, and then you'll notify them at the end of the tax year what your profits were for the tax year, and you'll be taxed accordingly. This is a really simple way to trade, but it is important that you remember that with a sole trader, there is no distinction between you and the business. You are in effect the same. So the business liabilities are your liabilities, the business profit is your profit, and therefore your tax liability. So if you think that you may want to be separated in liability, then this wouldn't be the option for you. And it's important to remember as well that you're not committed to stay as the same trading style, but it does make sense to look into it and give some thought to it to make sure you get what's right for you from the start. So perhaps you want to operate as a sole trader, but there's more than one of you and you're wondering how to go about that. Well, in this eventuality, then we can simply form a partnership. So in effect, it's very similar to the sole trader, albeit that there's more than one person. So the partnership that's formed, there still is personal liability for each of the partners, but the partnership will generate its own tax return to HMRC, and the profits of the partnership will be split between the partners in the same percentage as you agree and as you set up at the start. It is advisable, if you're going to go this route, to have a partnership agreement drawn up from the start, just so that everyone knows where they stand and what happens in the event of certain scenarios. And as with the sole trader, it is important to understand that the business is the same as yourself, and there's no distinction in sort of legal who's liable. So the business liabilities are your liabilities, and the same as if you're a sole trader. And just to be clear, when I talk about there's no distinction with the liabilities and the business liabilities are yours, that does mean that your personal assets are at risk. If your business gets into difficulty, if it borrows money that it can't pay back, if it runs up debts that it can't cover, then your personal assets would be at risk. So it is important to understand exactly what you're committing yourself and to think through possibilities of things that may or may not happen, just to be sure that this is the right style for you. So if you need to separate your liabilities, or if you want to separate your liabilities for the business from your personal assets, then one way to do this would be to create a limited company. So when we create a limited company, as known as being incorporated with Companies House, a separate entity is created. So that entity is separate from the person that owns and runs the business, which in a lot of small businesses may be the same person, and unless a personal guarantee has been given for any liabilities, then the company is responsible for its liabilities, and if the company can't meet its own obligations, then it's not necessarily passed on to the owner of the business. Although from time to time there are different reasons that people may decide to form a limited company, really primarily your main motivation for wanting to trade as a limited company as opposed to a sole trader or a partnership should be to have the limited liability. That should be your main motivation for deciding to go this. So the size of the businesses and traders that are likely to be watching this video, I would imagine that we'd be looking at a limited company in what we call limited by shares. That means effectively as the owner of the business, you buy your share in the business and then you own the business. A director is the person that runs the business. And as I mentioned earlier, you can have a sole director and owner. So just one person might be the director and the shareholder. So therefore owning and running the company. If you do operate as a limited company, it's important to understand that it is a separate entity from you. And so any money that you take from the company needs to be accounted for. So we would account for that in one of two ways. So firstly, as the director of the company running the company, you may be paid a salary through the payroll and your tax deducted at source by PAYE. This would be an expense of the business and effectively reduce the profit. So obviously you'll be paying personal tax on your income rather than the corporation tax on the profit. The other way that the money taken out could be accounted for is by way as a dividend. So this would be as owner of the company and shareholder actually receiving a return on your profits. So in this scenario, the company earns the profit and the company pays corporation tax on the profit, and then what's left is available for what we call distribution to the shareholders. So a dividend would be taxed dividend tax, not income tax. So that would be a different rate. As a limited company, as well as submitting a company tax return to HMRC, you will also need to arrange for statutory accounts to be submitted to Companies House, and the directors may potentially, and the shareholders, depending on the dividend income, may need to submit a personal tax return as well. So the reporting of requirements of a limited company are more onerous than those as a sole trader. So therefore, if you're using somebody to do this for you, you will find that the costs will be higher. And as well as this, generally speaking, some people may be able to do their self-assessment personal tax return themselves. And there's nothing to stop people, if they wanted to, submitting their company tax return or their accounts to Companies House. But it's less likely that people will be able to do this themselves. It's more likely that you will need help if you haven't needed this to date. Although, of course, with anything, if you're not sure, then it's just best to get help, especially with accounting and submitting returns. And because submitting the wrong information, it could be that a few years down the line before it's picked up. And obviously that can have some devastating financial consequences if you find you've got an error which has underdeclared your tax liability. If you're a landlord, you may just hold the properties in your own name, and then you would simply declare the income on your personal tax return. It is possible to hold properties as a limited company, and that's beyond the scope really of what we're looking at today. But if that's something that you are considering, then definitely you should take advice on that and make sure that you're aware of all of the implications, both in terms of the starting up, the ongoing, and the exit strategy. So I hope that this helps you to decide what sort of trading style you want to operate your business as. If you haven't already, as I already mentioned, please do subscribe to our channel, and good luck with your business. Thank you. Bye.